Bloomberg Audio Studios.
Podcasts, radio, news.
We'd also like to welcome our listeners from Bloomberg Radio as we're now joined by a special guest. He runs Bank of America, which operates in over 35 countries, including, of course, here in Japan, where they opened their first Tokyo office in 1947. In fact, Asia accounting for about 39% of the bank's international revenue last year. Joining us exclusively is Chairman and CEO Brian Moynihan. Brian, good to have you in the Tokyo studio.
It's good to be here, Shery. I mean, it's a very exciting place these days.
I mean, you guys have been operating since, the end of World War II. How is your business going? It's
great. So we operated in the banking side since the end of World War II. We've operated on the security side and became a full member in 86. So we've been here a long time. About 800 teammates, one of the largest non-Japanese banks in the city. Corporate banking, investment banking, treasury services, and obviously the markets business. Done very well here.
What parts especially are we seeing more excitement about?
Well, if you think about Japan, the excitement overall is the changes in structure. Obviously, the interest rate structure coming up. Inflation from a country that had no inflation for years, for 30 years. It changes people's attitudes, wage growth. And then also on the other side of it, you're seeing the corporate reforms going through, which are critical, and the push for the government to move the money outside the deposit banking system into the investment system, which will happen, which is drawing a lot of interest from outside world. So we're hearing a lot of M&A dialogue, and it was up last year, and we expect it to be up this year. We heard about 40% of our revenues of Asia are in here in Japan, so strong. We're seeing a lot of market activity. And then the flows, the capital flows, in the treasury services business, which isn't exciting as an M&A deal, but is critically important to the profitability of our company.
We were just mentioning 7&I, for example, and I know that you guys have been involved with them. We are now hearing potential listing in the U.S. business?
I'd have to lead to my teammates. I don't get involved in a deal, but look, we have a great team here, and they do a great job, and if they think it's the right outcome for our customers, they'll tell them, and we'll see what happens.
But that's sort of part of that corporate reform story.
Yeah, it is. That's the idea. We've been with government officials and clients, and the companies are excited to have in the classic word, animal spirits. Let's get moving. Let's merge these companies together. Let's modernize them. Let's keep working on the cost structure. You have very low unemployment rate here, 2% plus, very low. There's plenty of capacity to absorb, employees. There's a little more competition for wages, competition for employees, wage growth. So I think all that sets up the ability to get the reforms going through, whether they're corporate reforms, return reforms, that demands that you've got to return capital, getting cash off the balance sheet of these corporates, either back to shareholders to do something. But in the end of the day, you've got to come back, and it's got to be wise deals that are strategically important, that add value, because spending money is the easy part. Making it really get the returns after you spend it is the hard part.
There's more in the pipeline for Bank of America when it comes to deals this year.
Yeah, it just, the amount of conversation, the amount of excitement, both inbound from outside the rest of the world, and also outbound from the large companies here continue to expand, across Asia, but importantly into the United States, because frankly, a lot of the manufacturing debate that you talked about in the earlier section is they need to expand their manufacturing to maybe avoid potential tariffs, which is unknown what's going on.
Yeah, how much does that add to business uncertainty for you?
Well, I think clearly on the business side, you after the election, you had businesses very enthusiastic about the lower regulatory burden they'd have, the ability to get deals done, and you went from conversations last summer, which were sort of interesting conversations with the boards. Our teammates tell me they go in and they talk, and they'd show them these deals, and they'd say that makes sense, but it may be hard to get it done now. Get in here and let's talk about these deals. President Trump's administration has made it clear they're trying to get some things done, which may cause some short-term, sort of lack of understanding. That affects the business community, but they're saying, in the end of the day, and the president said in a speech the other day, we may have some short-term disruption to get to the long-term goal of downsizing government, downsizing regulation, et cetera. And I think the businesses now are sort of saying, well, I've got to figure that answer out. And that's fine, because it's what it feels like forever, a month or two or three. But meanwhile, on the consumer side, you're not seeing any change in activity, despite what they're saying, which is interesting.
Tell us a little bit about that, because in your last earnings call in January, and that was before the inauguration of President Trump, you were saying that consumers were still spending more than last year. Is that still the case?
So if this is sort of the dichotomy of what a consumer says they're thinking about versus what they actually do. So if you read the information of the last month or so, consumer confidence has come down, and they're worried about inflation going up and all that. That's that's sort of what they say they're going to do. What they really are doing, in the month of February, they spent 6% more money out of our accounts into the economy than they did last February. And year to date, it's about 6.5%. You compare that to the fourth quarter, it was about 4.5%. We felt pretty good about that. So the consumer is still spending. And by the way, if you look at what they spent on food, basically flat in February. So despite the discussion about egg prices and things, the actual total expenditure is about flat. Services, travel, entertainment, growing, and that helps drive jobs, because those all spending by consumers drives jobs, but the ones that are service-oriented and the entertainment require a lot of people to service them.
Aren't other policies from the administration, though, a little bit more disruptive when it comes to, say, immigration and hiring for these small and medium-sized businesses?
Well, if you go to small and medium-sized businesses, they've been facing two issues. One is the real cost of money went up a lot for them because they borrow on lines of credit, short-term lines of credit, and so they have to make sure when you're talking about you have SOFR at 4.5% or whatever plus their spread. That was SOFR at 50 basis points plus their spread. That was a big change in rates. So they had to always be more careful. When you saw them kind of conservatively handle their lines of credit usage and stuff, then the election happens and they feel really good about the regulatory. But they started noticing they weren't be able to hire as easily and stuff. And so they're worried about, where people think they're worried about inflation, they're actually right now a little bit more worried about getting employees and running the businesses. And I think as these policies settle in, you'll see them settle in. But they were over-regulated. All companies were, but the small, medium-sized businesses felt all the labor regulation stuff. We have thousands of people who can deal with it. They don't. And so if you're running your own business, and they feel good about that, but it's offset by, let's get a set of rules set and then we can go. How
soon do you think they'll get some help from the Federal Reserve by lower rates?
Well, the market now, I think, put 3 cuts in after some of the data. And the market's been all over the place in a sense, because over the last 90 or 120 days, I bet you we've had 5, 6 cuts to 0 cuts, back to 3 cuts. Our team believes that the Fed is kind of done cutting rates until inflation kind of gets in control. They believe that and I'd say they may, as they're thinking about that, given that if these tariffs go in, they thought they would have some impact on the growth in the U.S., and that may cause them to think about that. But right now they're saying, look, you've got a real rate structure, which is Fed. You've got employment pretty stable and loosened a lot over the last year. And so maybe their view is there'll be no cuts. We'll see what happens if they start to see.
You also don't think inflation is getting under control, or there are upside risks?
Our team of economists always thought it would take 3 years to get inflation under control. And so they projected to get down near the target towards the end of 26, but it takes that long. And everybody says, why doesn't it happen faster? It just takes a while for it all to work through the system, especially with the amount of stimulus and other things that went on.
In the meantime, you talk about markets being all over the place. Yeah. Has that increased your activity in that sense, in business, in markets activity?
Well, if you look at the first quarter, we told we gave our guidance in our first quarter call, and NII was going to be up flattish quarter to quarter with 2 less days. That looks in great shape. Loans and deposits are what we expected to happen. The trading revenues been strong and up from last year, mid-single digits type of numbers. So we feel very good. I'd say the M&A, the debt capital markets open and processing through. The equity capital markets, as we talked about, a little slower but still solid. Everything's in good shape. Then the wealth management business very strong. So we feel very good about the current prospects of our company.
Same here in Japan, because we saw the brokerage unit, for example, posting a loss for Bank of America in 2023. Did it get better last year?
Yeah, you got to be careful of our legal entities, because we don't run the business that way. We run the global things. But the group here made about 30% of the pre-tax profit for Asia. They're a very strong group, and so sometimes the mechanics of how that runs through, because of the bank and the broker dealer and the parent, I wouldn't get too concerned about or too interested in the legal entity profits.
When it comes to the JGB trading aspect of things, are you seeing more interest? Are you building that up?
Yeah, we continue to add people in the trading business across the world, honestly. Jimmy DeMar's done a great job. We've moved up about 200 basis points or so in market share across the last 5 years. We've given them more balance sheet, more risk to take. They've done a good job of deploying it, and they keep adding everywhere. As the activity picks up, we're adding people here too.
Yeah, because for the first time in a very long time, we are seeing a lot of volatility in the rates market, a lot of interest as well. We've heard about difficulties hiring, for example, rates traders, because all of a sudden this became so exciting.
Yeah, That's going to be true, and I think that one of the keys, and you personally are thinking this, there's a lot more people coming from the outside to work in Japan, and the rules and regulations allow that to happen. So we'll also hire internal people, but if there's not enough, we'll bring people from around the world to help on it. It's an exciting city to live in Tokyo, so it's not hard to get people to come here, and you're able to get them in and work, and so we feel good about that. And from the country's perspective, that's one of the things after women came into the workforce and after there were people worked a little longer, what you're seeing is foreign workers coming in of all different types stuff. And so we feel good about that we can get prospects here. But it is a tight labor market, there's no question. A lot of talent, but a lot of demand for that talent.
We are seeing also a lot of interest by activist investors, and you have a big advisory in that sector. What are you seeing in terms of
We
business?
agree with you, and I think I'd be careful about only equating that to activist investor. The pronouncements by the government and the exchange and stuff that you've got to move, the amount of cash on these balance sheets are making things happen. So activists can catalyze that activity, but at the end of the day, what's going to also catalyze activity is boards of directors and management teams saying, we have been given a mandate to change, and now with the interest rate and inflation and things, a billion economy, we got Japan growing at 1%. That doesn't sound great, except for where it came from. That is great, and so I think that is going to cause more activity necessarily. So yes, there's activists, and we have an advisory business that helps people through that discussion, and they'll cause activity. But the imprimatur by the government to drive activity also causes it. And when I talk to CEOs of companies with big market caps, they're figuring out how to reposition themselves to keep driving.
Are you using more of Bank of America's balance sheet in trading here in Japan compared to other parts of Asia?
Asia, we have 5 or 6% growth, so you really have to be careful. So in Australia, we have a great business, and so we've added about $200 billion across the world in trading balance sheet. And what percentage of one here? I have to get somebody to give me the statistics, but we're supporting the business everywhere.
Some of the things that we've seen across the world, of course, we've talked a little bit about the fragmentation, about tariffs. When you see that growing rivalry between China and the U.S., for example, is that something that concerns you as a CEO when you look at Bank of America's business?
Yeah, our business is going to reflect our customers and clients, and so in the U.S. that's consumers and wealthy consumers and business of all size and corporates and then investors. Outside the U.S., our business is very specific. It's large companies, and large investors, and so anything that causes them to move money, we have to follow and help them do it. So it'd be great if everybody were all on the same page and everything was perfect. That just never happens. It's never happened in world's history. It's not going to happen tomorrow either. So I think the concerns of how to move money around and how to where to invest, I think at the end of the day, we're sitting here in Tokyo. This has become a favorite place to look, and there's other places like this around the world. The United States is a strong place to look as we travel around Europe and other places. So I think it's really going to reflect those customers as opposed to us catalyzing activity and us running our business differently. We run our business to support our customers and clients, and they dictate the activity, and then we help advise them about that activity. And what we're saying is they're enthusiastic about the growth in the U.S., the growth on a global basis, 3% plus. The rate structure coming down a little bit across the world, the ECB cut rates, so they're feeling good about it. They just need a business likes plans 3, 5, 7, 10-year cycles, and it's hard to do that when there's this much movement. But on the other hand, they face this all the time.
You've been at your post for a long time, so you don't see this time as any different from past cycles?
Well, I always look at it in the context, believe me, right after the financial crisis, it was a kind of interesting world out there and the reshuffling of all the activities. And so every time has its unique things. What we do in the company is really focus on driving, our mantra is we have to grow no excuses, and we have to do it with the right risk, and we have to do it with a great team, and we have to keep driving efficiency and effectiveness. So the rules and regulations, our industry is looking in the United States for a reduction in regulatory burden that built up after the financial crisis for good reason, but kept building up when the reason wasn't as good. Those things are important to us because, frankly, it allows us to serve our customers better.
You're having those conversations right now with President Trump.
Yes, it's been going on for a while. And so the Secretary of Treasury spoke yesterday in New York and laid out some of his thoughts. And so this isn't new. This was going on for a while. And so our job is to get a set of rules that are fair and down the middle and help businesses be strong and help the economy grow with the right risk management. And I think is it different? It's always different. Tomorrow will be different than the day. There'll be a different set of factors. The question of how we run our company is consistent, and we run that company to have, how we drive it is important to serve those clients, do it the right way, do it and make good money, and do it the right way.
The shift in geopolitics, in the world environment, macroeconomics, but also it seems in culture as well. This rollback in DEI initiatives, for example, which includes Bank of America, will it have a negative effect, especially across Wall Street?
Look, we think of our company as creating opportunity, and think of it two ways. You can look in the mirror, you can look in the window. And so the mirror, it's who we hire. We hire from 400 plus schools we go to. We hired 30,000 people from low and moderate income neighborhoods, giving an economic opportunity they wouldn't otherwise have. 10 to 15,000 veterans over the last 5, 6, 7 years. So we hire people and create opportunity for them. And those teammates then can do everything they want to do. Like last night we had an alumni group here in Tokyo, and you had people who worked our company 15 years and went off to help create a startup and stuff, which is also good for the Tokyo, the Japan economy. And you had other people who retired and other people who did a lot of things. But the idea is we create opportunity. That's the window. And once they're here, then the question of how they feel is important. And so we have 300,000 memberships in our employee groups, et cetera. The rules changed in the United States. We had to change to reflect that. But the principle of having a great workforce that is well-trained and has a chance to do everything we want to do at Bank of America and recognize their opportunity is good. Outside our company, we also look at the opportunity to create that through our lending activity and everything, and also the programs that we work with to help other companies find and access teammates who are going to get an economic opportunity. You join our company, you start at $50,000. You get all the benefits. You get training. You get education reimbursement. And when I meet with the teammates who have been with us 15, 60 years, they started as 17 or 18-year-old kids in part-time, and now 50 years later had a great career. That's what we want people to have at Bank of America.
Right, Moynihan, you have to join us again. You've talked about how many opportunities you see in Asia, especially Japan, so it was really great talking to you. Thank you so much for coming here. He's the chairman and CEO at Bank of America.